Hello, what is up guys? Eman from Peso Smart PH here. Welcome sa panibagong episode. Shout out to all the podcast listeners as well. I appreciate you all. Today, let's see if the stock market can predict US presidential results. Since 1953, stocks have gained 11% per year on average when a Democratic president wins, and only about 6.5% when a Republican president wins. This is another reason why election results are important to the people. Usually, when the stock market drops while you're at the White House, voters will more likely drop you. However, if the stock market rises, voters will more likely keep you in the office. According to Mark Hulbert, an incumbent political party is favored when the Dow Jones Industrial Average or DJIA is up on a year-to-year basis, according to a prediction model with a 99% confidence rating. And when the DJIA had its best returns, the incumbent party wins around 90% of the time. So that's a really high percentage. And on the second best return for the Dow, the incumbent wins about 70% of the time. And on the second worst return for the DJIA, the incumbent candidate or party lowers its chance of winning to above 40%. And on the worst return for the Dow, incumbent's chance of winning is around 38%. So that is the lowest whenever the Dow doesn't perform that well on a particular year when a presidential election happens. Currently, the Dow is up 11.86% year to date as of November 2, 2024. And based on Mark Hulbert's model, Democratic presidential candidate Kamala Harris has a 69% probability to win the presidential elections tomorrow. The stock market prediction model is not complicated. It exploits the historical tendency for the incumbent political party's chance of electoral victory to reflect the Dow's year-to-date performance. The model's track record is statistically highly significant. It's at 99% level. And the model makes theoretical sense. The stock market is forward-looking. So a rising market means the most investors are upbeat about the economy's prospects in the coming months. Numerous studies have found that people tend to vote their pocketbooks. Even though the model had a perfect track record, there is no guarantee that it will be right again this time around. And we have to be careful when looking at these kinds of predictors because sometimes it's just pure correlation and not causation. That is a common pitfall when using forecasting tools like these. Now, let's take a look at another model by LPL Financial, which uses the S&P 500 as a predictor of US presidential elections. This model has predicted the winner of the elections about 83% of the time, and was wrong only 17% of the time in the last 24 elections. When US stocks were up during the 3 months before election day, the incumbent party kept the White House on 12 out of 15 occasions. And the party in power lost 8 out of the last 9 times that the market was in negative territory leading up to the vote. Currently, the S&P 500 is up around 11.79% since early August, and the election again will be tomorrow. Based on the historical trend, this bodes well for Kamala Harris. Although one caveat about this model is that in the most recent elections back in 2020, the S&P 500 returned 2.3%, but Donald Trump, the incumbent at that time, still lost to Joe Biden. Since 1980, when Ronald Reagan beat the incumbent party, this was the first time in 40 years that this particular model was wrong. Lastly, if we take a look at the national polls in the US, Kamala Harris currently has a 1.2% lead according to 538's National Presidential Poll Tracker. Harris is at 48%, while Trump sits at 46.8%. And around 5.2% are still currently undecided. Even after looking and reviewing these models, there's still no one in the world who can predict with 100% accuracy who will win the presidential elections. It's fun to see that these models can be right most of the time, but it can also be wrong sometimes. And again, we have to remember that correlation does not mean causation. There are a lot of factors to consider why people vote the candidate that they want to lead their country, and the stock market is just one of them. Voters are influenced based on their social class, their age, the media, their gender, their geography, the current state of the economy, the image of the party, and the candidate itself. We will learn who wins the election in about a week, and may the best candidate win. We will end the episode here, guys. Let me know your thoughts sa comment section down below. Thank you very much for watching and listening. I'll see you on the next episode. Always remember, be Peso smart.